Thank you. Is there anyone? Thank you. We'll wait to, the next, we'll let some people who haven't asked a question or made comments first. Is anyone else, microphone 1 or 2? Yes, sir.
My name is Doug Scott from Flaten, Alberta. Also a fourth generation grain farmer. We hear a lot about, from the anti-board side, about the creation of a dual market and a voluntary board. Could someone comment on that question as to why or why not this board?
Could you please repeat the question so everyone can hear it before you answer?
I think you're asking, there's a lot of discussion and talk about a dual market, and you'd like a comment from the directors as to why or why it will not work.
Dual market, been talked about for a long time, as long as I've been in farm politics, I think, which is over 20 years. And why can't it work? It always sounds like a good idea. It actually would make my job a lot easier because then both sides on this issue might be happy. The only problem is it's just simply not possible. If I give you some historical examples, in Australia 3 years ago, that organization, the Australian Wheat Board, went from being a mandatory organization to voluntary, and it had a very short history, 3 years. In Ontario, their Democratic side voted to go to a voluntary organization. Now the Ontario Wheat Board is only handling 7 or 8% of the volumes there. In all practical purposes, that is an open market. In my view, a dual market is simply a transition into a completely open situation. And for those reasons, that's why, although we'd all like to see it, it's just simply not possible.
Since there's no further questions, yes, sir. Okay, last question for this particular part of the meeting. And you really have to speak into the microphone.
I'll try to yell. Thank you. You didn't explain to us what the board lacks to be in a dual market. What is a grain company made up of, and what does the board need to do to match that?
Okay, I can go into a little more detail. If the Canadian Wheat Board loses its single desk, in essence it will have to become a grain company. It's never operated as a grain company, never retained any earnings. And in fact, on July 31st of each year, all earnings go back to farmers, and we start anew again. Because of that fact, it's never done any of the things that grain companies do. It's never acquired assets. It hasn't retained earnings to have a capital base. So that's a situation that Canadian Wheat Board would be in absence of the single desk. A very small player, a very weak player, up against very large grain companies, and completely reliant on those companies who would now be its competitors to execute any sales. So that's not a very enviable position for a new entrant into the marketplace to be in.
Thank you, Ellen. We will now move on to the second part of the evening, and with a presentation from our Vice President of Marketing and Sales, Gord Flaten. Gord has held this position for about 5 years, and Gord is originally from Saskatchewan. Gord's going to speak to us about what's a single desk for anyway.
All right, Thanks for coming out, everybody, and please shout out from the back of the room if you can't hear me. I expect I'm loud enough right now, but if I tail off, let me know. Really appreciate the huge crowd, and especially those who've driven 2, 3, 4, and more hours to get here. We realize the commitment that you're making. I'm going to be the only non-farmer director speaking tonight. I'm the hired help, and what I'm going to focus on is one of the core aspects of the business structure of the Canadian Wheat Board, and that's the single desk. I'm hired to manage the 14 or so of us who sell all of the wheat, durum, and barley that the Wheat Board markets, which means that we negotiate about 4,000 sales contracts a year. We sell to about 300 customers in about 70 countries each year of those three products. And as you know, the business is on the scale of about $5 to $8 billion a year. What I'm going to condense what can be a complicated topic down into 3 points, and if you ask me what allows us to use the single desk to make more money for you, then I would summarize it in these 3 points. We use it to market strategically. We use it to negotiate better service and lower costs in the supply chain. And we use it to price directly to buyers or price differentiate amongst buyers. And I'll just explain each of these quite briefly. Now, this is a slide that you're not going to be able to read from many parts of the room, and that's not the intention here. I just want to use this as an illustration of marketing strategically. First of all, I should just tell you what the picture is all about here. If you look on the bottom of the chart, this is just a timeline of a typical pool year. So from the time we start selling each year's crop, which starts occurring in the spring prior to harvest, until we go through all the way through the year and into the following fall. So over a period of about 16 months or so, we will sell each crop that you produce. This happens to be the time period of 2007-08. The vertical part of the chart here is prices. And what this chart shows you, just to give a nice simple example, this shows you durum prices in 2007-08. And I realize there's not a lot of durum in this particular area, but this also applies to the same example applies to spring wheat and to barley. And it's just here to help explain a couple of things. One thing to understand, at the beginning of that year, of course, we were coming out of the 2006-07 crop year with relatively healthy carry-out supplies, but it became pretty clear early in the year that we were going to have production problems in durum and in other crops around the world that particular year. So starting in June, when we would typically be selling, say, somewhere up to 5% or so of the durum crop, and the same thing for spring wheat. We were seeing a fair amount of nervousness in Europe about the quality and quantity of durum that they were going to be able to export that particular year, and we could sense the bullishness in the market that particular year. So we were pretty careful about how much we were selling and at what prices we were selling. You could tell as you took the price up from one contract to the next, $5 to $10 a ton from sale to sale. You could sense that there was going to be a fair amount of demand there. At that point in the year, we try to make some projections as to what the price, what prices are going to look like over the course of the year. Now, in the case of durum, as in the case of high-quality spring wheat, and sometimes in the case of malting barley, we don't predict the market accurately with precision each year, of course, but in a year like this, when you can see that there's going to be some supply problems, you know that the prices are going to start rising as we go through the fall and into the winter. And what that makes us do is be pretty careful about forward selling of supplies. Now, we will make some of those sales just to hedge our bets a little bit, and also to provide some service to some customers. But in a year like this, we will go a little slower than we would normally. This year, as we watched durum being sold out of the U.S., we did hold back quite a bit and let the U.S. market supply the world for the first couple of months after harvest. That was a rational thing for both us and the U.S. sellers to do, and I would just want to use this to illustrate a bit of a difference between a single desk system and an open market as we have in the U.S. With the single desk system, if we don't make sales at the early part of the year here, and if we have a bullish market outlook, we know that we're going to make those sales later on in the year because we have control over the entire supply from Western Canada. In the case of Durum, we supply more than 50% of world exports each year. In the U.S., if you're an exporter and you see sales opportunities, there's customer demand at this time of the year, even if you have this exact same information and the exact same market outlook, it's perfectly rational for you to make sales at that particular point in the year, because if you don't make that sale today, somebody else will. And those U.S. Durum supplies are going to be sold whether you participate or you don't. So U.S. Durum exporters were supplying the world market at this point in time. We held off until later in the fall as prices started to rise and the U.S. started to run out of Durum, and it became clear to the entire world that there were going to be problems in this market, and sold a large chunk of our Durum supplies in these high price periods. That and in fact at some points in time we were selling Durum over $1,000 per ton. Now, as I say, the same thing can happen if you've got limited supplies of high quality, high protein spring wheat. Same thing can happen if there's a shortage of malting barley supplies. The opposite can also occur. If you have surplus supplies and you've got a bearish market outlook, you can speed up the pace of sales in order to take advantage of your position. Now, we're careful about doing this. We don't have perfect information, as I say, about what prices are going to do in any particular year, but when you do have control over a significant portion of world supplies, you can market strategically and make more money this way. This is one of the points I like to raise when it's pointed out that we don't have a monopoly over the entire supply of world wheat or Durum or barley. It would be great to have a monopoly over an entire world supply. You could do even more, but the point here is that you can do a lot with a single desk and control over even just Western Canadian supplies. The second point I want to make out of the three is that we do use the single desk to negotiate better service and better costs in the supply chain in many ways. And I don't have time to cover them all, but we do have commercial contracts with incentives and performance penalties with a lot of the supply chain partners, the grain handling companies and the railways, to try to increase flexibility, reduce risk, and reduce costs for us and therefore for farmers. Again, this doesn't work perfectly. We are dealing with a situation where we've got two railways that have a lot of market power, but if you have more power than a bunch of individuals or individual companies, you can do more in terms of negotiating these kinds of commercial contracts. We also provide fair access to the transportation and handling system for all farmers without that access necessarily coming at higher costs in times of scarce supply of transportation services. And we do represent farmers' interests on a lot of issues, such as challenging the service that the railways are providing at certain points in time. And it's important when you're challenging big corporations like that to have both the resources, the money to do these things. You have to be big to challenge those kinds of companies. And you also have to have some commercial involvement in the system in order to really understand at the level you need to explain to the courts and others what's going wrong. And that's something that, as hard as they try and as valuable a role as they play, farm organizations, general farm organizations, have difficulty doing. They don't have the resources and they don't have the commercial involvement to do that, and an organization like the CWB can play an important role there. In terms of lower costs in the system, we do fill constrained capacity at places like the West Coast. There are limits to how much grain we can ship through the West Coast. We fill that up as much as we can, but only to the point where we fill it up and we don't overfill it and therefore face higher costs from the companies that own those constrained facilities at the ports. And the other thing I'll point out on this slide is producer cars. We try very hard to accommodate producer cars in the system. We're able to do that because we can direct grain to the ports. We control the wheat, the durum, and the barley that goes through any one of the company's handling facilities at the ports. You don't have to have an agreement with Viterra or Cargill or Richardson's or any company at the port.